The Compliance Plus business growth model is designed to help you assess how many of your clients could potentially be upsold the new services that you provide using VFD Pro, the number of people who would need to be trained to deliver these services, and the increased fee income this would provide. The objective of Compliance Plus as a strategy is to add value to existing clients as a justification for increased fee income, plus to introduce the other higher value support services such as management reporting and regular review meetings, planning, forecasting and reporting performance versus forecast, ideally whilst taking the part-time financial director role, leading to helping as many clients as possible plan for and exit successfully. For each of these three, we have a projection of the percentage of clients we expect to upsell, in this case 5%, 2% and 1% respectively. We've got 200 clients in total with an average fee income of $2,200 per annum. The percentage of clients for whom things like the client discussion model and FIMBO training are likely to be appropriate is around 50%, and we're going to assume in this instance that 3 members of the team need to be trained. The second tab on the model, Cost and ROI, takes us into mapping what that might look like in practice. The input fields have been pulled through from the first tab, with one additional input field, which is the target fee increase. We have the workings at the top here, but we'll come back to that in a moment. We can expand the next section of the spreadsheet by clicking on the plus sign to the left. If the objective is to engage with 50% of your 200 clients, that's 100 clients. And you can see here that in order to have 100 meetings by the end of the year, we would need to have 8 meetings a month, and obviously this is rounded to whole numbers. Now, if you wanted to reduce the number of meetings per month for whatever reason, you could do that either by adjusting the percentage of clients to target, or just overwrite the actual number of meetings you plan to have. For the purpose of this example, we'll have 8 meetings per month, every month throughout the year. Next, we have the introduction to FIMBO training programs. The idea would be to market your FIMBO training programs to your entire client base, but make a very specific request, almost an instruction to clients that they really do need to attend, if only to experience it and to provide feedback. We assume here that these 8, or as many of these 8 as possible, plus other clients and prospects, will attend the intro. And having come to the intro, there's a high probability that you'll get a cohort of business owners interested in business growth coming to the forefront of your program, and therefore receiving 4 sessions a month, assuming a 4-week month, over the course of 3 months. So this takes us up to month 5. So to recap the client experience. First, they have a meeting, which is completely different to a typical compliance meeting because we're talking about the future, and we're using the client discussion model to look at the value of the business today, the current trends in the business and potential for improvement in both revenue and profit, EBITDA, and of course business valuation, and looking at the impact on business valuation in 5 years. So that should be a high-value meeting. The suggestion is also that wherever appropriate, you'll be sending the business overview to clients every single month, reminding them of the value you can deliver and with no additional charges at this stage. They then come to the introduction to FIMBO training, and then they start to come to the weekly session. So there's a lot of added value being provided, and the only question is, by how much are you going to increase the income? Now we come to explore what the bits at the top are saying. We're going to target 8.3 clients a month, which rounds down to the 8 we see here, to give 100 meetings with clients a year. Before we apply any fee increase, the monthly fees are $183.33 or £2,200 per annum. If we apply a 10% increase, the monthly fees will go up to £201, which is an increase of just £18. Having increased prices, you would have generated an extra £153 of fee income per month from those 8 clients. And then at this stage, we see feedback. Feedback, feedback, feedback. Get feedback from your clients. How happy are they? Are there any issues that need to be addressed right at the outset? Then get feedback again after the price increase. Now, if the feedback is that clients are extremely happy and they think the value that they're receiving is massively greater than the £18.33 extra they're spending, you would maybe try a fee increase of 20% and repeat the exercise. So now you'd be bringing in an extra $611. And obviously this increases both periods here. If your client feedback indicates that clients are still very happy, you might even try out a 30% increase, or you might even go to 35%. So this is a more structured and safer way of deploying a fee increase, and VFD clients deploying a similar strategy in the past have seen a fee increase between 25 and 100%. So one option is to continue to increase the fees. Let's assume that 35% is the increase we think is appropriate. We could continue to speak to 8 clients a month, then intro, then training, then increase the fees, and do this for a small part of the client base every single month. Or you could take an alternative approach and say, by month 7, every single client will have received notification that they're going to get a different meeting, and they're going to receive invitations to attend the FIMBO training. And we would hope that by the time we get there, we've also been able to share multiple case studies and hopefully lots of testimonials from the training and success clients have had. So you might decide at that point to increase the fees across the board, at which stage it will bring you an extra £6,500 fee income every month. And you'll see the impact of that by the first year is £24,000 if you did it incrementally, or £41,000, maybe £42,000 if you did it in one go from month 7 once you finish testing the potential to increase prices. This model assumes that there's no additional fee increase in year 2 or 3. You'd then go on to invoice an extra £75,000 or £77,000. Whichever route you take, it's £77,000 per annum of additional fee income every year ongoing, simply by deploying the Compliance Plus strategy, which has very, very marginal costs, and therefore just about all of that additional revenue goes straight to the bottom line. Now remember, the objective of the strategy was to increase the value delivered to existing clients as a justification for increased fee income, but also to introduce and expose clients to the benefits of using financial information to better manage their business, and then making clear the need to not only plan and forecast, but also to prepare for exit. So a percentage of clients over time are going to upsell. If you want to work out what the costings would be for the incremental strategy, this can be found by expanding the next section using the plus sign to the left. And below that we have the section for the all-at-once strategy. And for both we can see the cash flow profile. But let's minimise both of those for now and look at the next section we can expand, which is the upsell potential. For simplicity, we're grouping it as management reporting and periodic review. Remember, there's no point sending the report without having the review meeting and holding them to account. Part-time FD, so the planning, forecasting, reporting, performance versus forecast, and wherever possible, taking control of the entire financial function for clients. Then we've got the exit planning, helping the client ensure that they're ready when the time comes to exit, be it planned or otherwise, because everybody has to exit eventually one way or another. We see the range of income from £250 per month per client incremental, up to maybe £500 a month, and taking the average of those two we have £375. Now clearly there are firms providing a service for less, and there are firms charging clients significantly more than this. If we move to the part-time financial director services, anything from the bare minimum of £750 up to £3,000 and higher are being charged by firms. So we're going to take a very modest target of £1,625 as the average, and ideally we'll have more at the higher end than the lower end. As we add even more value with the exit planning, we've got a range of fees here between £1,500 and £3,500 per month. Frequently that number is again much higher. So that's the price you would charge out at. We already had the take-up figures of 5%, 2% and 1% of client base, which has been carried over from the first tab, which will give us the number of clients that we would be upselling to. So now let's look at the cost of servicing that work. The SLA, the service level agreement that you would enter into with the client, might be that you're going to have a meeting once a quarter, which would require you to commit 1/3 of an hour per month to service the engagement with the client, which is just 20 minutes. We then allow 1 hour per month for the part-time FD services, and we're actually going to spend time with the client. Bear in mind that once you're up and running, the reporting is really very straightforward. Then 2 hours a month to invest time with the client working on the exit plan. It's really going to take a little bit longer than that, so how much time are we going to allow for the costings? If we allow 2 hours per month for the management reporting, we're hopefully massively inflating that and the actual requirements will be substantially less. But let's assume it's 2 hours a month to service a 1 hour per quarter meeting review. 4 hours per month to service the 1 hour with the client for the part-time FD service. and 8 hours a month to service the 2 hours with the client for the exit planning and support service. Again, it's going to be much less than that, but that really inflates the cost and helps us look at the profitability of this sort of work. We also see the cost of staff, which in this case is £45 an hour, and that's not the charge-out rate, but the internal cost. And we have 2 team members taking the VFD Mastery training, which would enable them to provide the more advanced services as specified on the first tab. And then we have the cost of that training. So that's the assumptions on cost. We can then expand the next section and its 3 subsections to look at the upsell potential. To make it a bit easier to demonstrate, let's assume we have 1,000 clients, as it's rounding down. We apply very low take-up rates of 5%, 2% and 1%, and we need to get a big enough number to get to 1 quite quickly. So 5% of the 42 initial discussions will come in at 2.08, which rounds down to 2. We're assuming here that of the 42 people that have been spoken to, 2 will go on to purchase your management reporting and review meeting service. However, they're going to go through a bit of a process, as they'll have that initial meeting here, then they'll go to the introductory session. They would then go through the actual FIMBO training itself over the course of months 3 through 5. And we're assuming here that the actual sale, and therefore the fee income that would be going through your books, doesn't actually happen until 6 months later. The model works the same for the part-time FD services, except now we're using 2%, not 5%. So 2% of 42 is 0.83, which is less than 1. So we don't make any sales in the first month. But it carries through to the next month, which gives me 2 lots of 0.83, which is 1.67, which rounded down gives us 1 potential client. And that client, again, goes ahead and will start putting some revenue through the books in month 7. And then the same again for the 1% uptake of the exit planning service. Now, obviously, it stretches out longer the lower the percentage, so you'll see that there is a lag between starting the activity and actually seeing any revenue pulled through. In the case of part-time FD and exit planning, potentially you may not make any sales in the first year, although obviously we'd hope that you would. So we can see that for the management reporting, we get a 3% penetration in year 1, up to 5% in year 2, and 7% by year 3. For part-time FD services, we can see those figures are 1%, 2% and 3% respectively. And then for exit planning, 1% for the first 2 years, going up to 2% in year 3. And this obviously depends upon the current profile of your clients. And clearly one would hope that we would start to see activity to attract new clients using, for example, the FIMBO and Exit Planning 101 training courses, so that during the course of 3 years we would see the new clients coming in going straight onto the services. So over the course of 3 years, we're reshaping the client base. Your current reality is not the reality you'll be looking at in 5 years. We've also mapped the hours across the team, which in this case is 2 people, to show how many hours will be required each month. So we require 2 hours, 2 hours, 4 hours, 8 hours, and 8 hours. So that's 24 hours in the first year in total, which jumps to 272 hours required in year 2, and then 578 hours in year 3. It's not hugely demanding in terms of time or resource, but very high revenue and very high profit margin. If we then expand the next section and its subsections, we can put all those costs and all the revenues together. So we've got the revenues coming in from increasing prices for existing clients, management reporting and periodic view. We've got the planning, forecasting, reporting performance versus forecast, part-time FD, and then we've got the exit planning support. So the revenues flow through here, and you can see at the end of the first year we've got £30,000 worth of additional revenue. And that jumps massively to 153 in year 2 and 245 in year 3. So £250,000 in revenue. Next is the cost of sales, and we've included the cost of training in the first year, although the figures shown here should be treated just as an indication. We've then got the connection fees, and these build up as we go through the period. So you'll see that we've got a total cost of sales of £6,500 against £30,000 of revenue for year one, and a big percentage of that is actually the training costs. Then in year two, a cost of £15,500 against a revenue of over £153,500. And in year three, a cost of £31,000 against a revenue of over £245,500. So the gross margin in year one is 78%. In year two, it's 89%. And in year three, it's 87%. Meaning that by the end of year three, we've added £77,000 worth of additional fee income for Compliance Plus services, just through increasing fees and value. And it would be reasonable to expect a substantial increase in year two as well. Then £44,000 with the revenue from part-time FD services, so management reporting and review meetings. Then another £75,000 with part-time FDA income. And finally £50,000 for exit planning, giving a total additional revenue just shy of £250,000. So the revenue of the practice could potentially go from £440,000 to nearly £700,000. But look what happens to the margin, because the new work that we're adding is such high profit margin that we're on a 41% gross margin. On a really pessimistic basis, if your start point EBITDA multiplier was 4, and if your business looks like this, it's going to be a lot more than 4. But assuming 4, the potential business valuation at the outset was £264,000, and the potential valuation in 3 years' time is nearly £1.12 million, which is a massive increase. And clearly, if we increase the EBITDA, that takes it even higher. If you have any queries regarding the Compliance Plus business plan, please do feel free to get in touch on support@vfd-pro.com.